YouTube, what it do? It is your boy Young Soros here, back with another video. And in today's video, we are going to be talking about why you should stop trading options and why I'm stop trading options for at least a couple years until we exit this extremely volatile market. Trading options is a scam. All right, guys, it has been a scam since 2020. In 2018 it wasn't too big of an issue. 2019, 2020, but once you had that run up after the crash in 2020, that is when options started to become a scam. So if you like what you're seeing or enjoy what you're hearing, drop a like down below. But let's just jump right into it. Now, why do I say that trading options is a scam? Well, if you're not aware of what happened today in the market, what happened is that the entire options chain within the stock market broke. And what do I mean by that is that every single option within the stock market froze. The premiums froze, they weren't moving, and you could not exit the positions. Now, you may be saying to yourself, oh, that's good if the stock moved in the opposite direction, the premiums froze. No, what happened was the premiums froze, but time kept going, which means the time decay ate the contract. It ate the premium anyways. So with that being said, if you bought puts today and you saw the market move the way that it did, it came down here. It was around this time right here. No, around this time right here is where you had the options freezing across the entire stock market. If you were to buy puts right here, you would have lost. So with that being said, it has been a crazy couple of days, but that is not one of the main reasons why I decided to stop trading options. This is just the straw that broke the camel's back. What I'm really concerned with is that Microsoft. Now, Microsoft had good earnings. They beat, and I ended up buying a call option way back here around the lows. I bought this call option a week ago. If we zoom out, I bought this call option around here. They ran up, and then boom, they hit earnings, and then 345. Now, you may be saying to yourself, okay, you bought some call options, you made a decent profit. No, I actually lost on this trade, even though my option was 340. I had the 342 contracts. And I bought these options right around here. So with that being said, even yesterday when the options came here, I was up $100 right here. But once it got up here, I was still down $100, $200, even though I was $1 out the money. Now you may be thinking to yourself, how can this be? It is because of the IV crush, the volatility, and the fact that Microsoft did not move as big as it was expected to move. With that being said, Microsoft was expecting a 5% move. You could not hold that. As a matter of fact, I think we gained about 3%, and that all had to do with Google. We're going to get into that in a minute. But for the most part, you could not hold this 345 range. You sold it all off, and now you're back to the 338 range, and we might even fill the gap and go all the way back to retest the 330. With that being said, though, even post market, it's coming down a little bit. With that being said, though, I had two contracts I bought these around 225. They were 225 a contract. They came up here, they sold off, and I was down $100, even though it was one move out the money. When I bought these here, that's a pretty big move. And the fact that I only got paid, I didn't get paid at all. I lost on that trade. So the fact that I lost money on this trade, buying them right here and then hitting the earnings, that's not only is that disappointing, but it just goes to show you that, options are a scam, guys. The only way options can work is if you go back to my previous videos, I talk about this, but options only work in less volatile markets where there isn't a lot of liquidity. With that being said, if I were to, let me get into that. But first, what I want to talk about is the different ways you can go about hitting this type of play, because there are a lot of earnings coming up this season, and even after hours today you had, Meta. But what you can do is you can go shares or you can go futures. I'm going to be exclusively trading futures until we get out of this extreme market, whatever you want to call it, bear market, whatever you want to call it. I'm going to be exclusively trading futures. I've been trading options, I've been going about using different strategies to try to string along some couple wins. And you may be thinking to yourself, okay, you may have bought, a contract that expires, Friday, right? And even if I did, let's say that I did, this is still a pretty big move to hit. And the fact that I'm $1 out the money and still lost, even though I have 2 more days left, is kind of crazy, right? And even if you go further out with the time, you still lose on the same contracts. So with that being said, I'm done trading options. I might come back to them every now and then. I might, juggle different strategies, different things about it, but don't trade options. It is a scam, especially in this market. That is why I get so confused when I see the likes of Michael Burry and these people shorting things with options. It's not worth it. You're not going to get paid like you should have, because if I were to make this play back in 2020, I would have at least $2,000 lined up, and that is just off of one contract. So imagine if I had multiple contracts, if I were to make this play in 2020. But because it's 2023, there is a lot more volume. Everybody's trading options now. They can't just be handing out, 10,000% gains, to everybody. So they got to mess with the premiums, and the fact that everybody's trading options now makes options not only more expensive, but now the premiums are up as well as IV, and the volatility does not make things any better. So with that being said, like I said, guys, I'm done trading options. It is time to move on to bigger and better things, and one of those things is futures. If I would have hit this same move off of just buying the shares, I would have made a decent amount. Even if it would have came back around here, I would still be up on the play, not down. And with the futures, you can leverage those. They might be a little bit pricey for you guys, but if you can leverage the futures correctly, you can day trade them and get in and out of moves pretty quickly. They have pretty high liquidity. Futures are overall just better than options as of right now. I don't want to completely dismiss options, but in this current environment, it is not viable. It is not feasible. They may be cheap. They may be, quick in and out. They move, but there is too many things that affects the pricing, as well as the different things that make what an option is. Okay? It is not what it needs to be. All right. Now, with that being said, let's jump right into what happened with the market, the bonds, as you see, TLT, the 20-year, 30, all that stuff. So, as you may remember, a couple days ago, I said if the bonds cannot rally and they start touching these 5% interest rates, 5% yields, there is going to be some problems in the stock market, and problems there were today. We broke 420 and closed below 420. 420 on the stock market is where rallies usually come and die. If you break this level at 420, rallies are started and ended here. As you can see, all the way back in the June rally, you came below 420. You closed below 420. Once that happened, sold all the way off into October. You had this rally here. You came up, tagged 420 a little bit, came back down, and then when you broke 420 this year, you ran up all the way to 460. So with that being said, oh yeah, and you can't forget about, this rally, this breakdown here all the way in April. Breakdown, you come back up, tag 420, can't get above it. But rallies around this 420 level, they either came and died. And unfortunately, we closed below 420. So that is starting to make me a little bit bearish within the market because we could not hold this level. This is a very, very key level. It has been a key level all the way back since 2020 when we broke this. You rocketed, you came back, you tagged this a little bit and rocketed back up. So 420 is an extremely, extremely important level. Do not get it twisted. So the fact that we could not stay above here, and the fact that you have the bonds approaching 5%, if the bonds can't catch a bid tomorrow and they sell off even harder, I mean, it's not looking good for the end of the year rally. And also the earnings have been quite disappointing. You had Google down almost 10% today off of bad earnings. You have Microsoft, they had good earnings, but like I said, they sold it off just a little bit. They sold off half of their earnings move. So with all this going on, even though there was a lot of bearish sentiment, there was a lot of things going on within the market, and you may be thinking to yourself, you know, I showed you guys the fear and greed indexes. I showed you guys all the reasons why the market can rally. You know, we are living in unprecedented times. We are trading through this is going to be in the history books as one of the worst bear markets in the stock market history. And why do I say that? Because take a look at the bonds. The bonds have been getting absolutely demolished for the past year. This is one of the worst bear market for the bonds. So if this is the worst bear market we've ever had for the bonds, just imagine what something as sensitive as equities can do, especially, you know, with all these propped up earnings, propped up valuations, everything like that. It is only a matter of time before you start breaking down. And even underneath all the hood, you may be thinking to yourself, oh, we tagged, you know, almost hitting a double top here. SPY equal weight negative. The Dow on the year negative. The Nasdaq is up 20% on the year. SPY is only up 10% on the year, and that is because you have companies like Apple, Microsoft, Google, Meta, all these different big tech companies just holding the market up. But now that the cracks are starting to show in the earnings, you are watching the stock market quickly give up everything that it came here to do. So with that being said, Meta just reported they had decent earnings. So thankfully that will keep things afloat for now. We will see. But as you can tell, it's not keeping Apple afloat even after hours. With that being said, though, there is a lot going on, and I don't think I'm still, don't get me wrong, I still believe there is a rally in us, but the more and more we go into this, especially with the bonds hitting 5%, if the bonds can close above 5%, hold that level and go to 525, you know, by the end of this year or even next week, because if you take a look at the charts, we have not been able to hold a single bond market rally. We have not been able to do that. We've not been able to do it. Every time the bonds would come back, you would quickly sell it all off. And even 2 days ago, Bill Ackman, he covered his bond short and it rallied only to give it up today. You know, so there is a lot going on within the markets. It is under distress. Everything may seem fine now, but I'm telling you guys, 2024, that is where the real fireworks are going to happen. That is where it is going to be a crazy, crazy time in 2024. If you thought 2022, 2023, you know, if you thought the ups and downs and the left and rights are bad, 2024, it is not looking good for us as you're coming off of yield uninversion as well as the bonds reach 5%. The yield curve is uninverting too. So the recession is around the door as well, and closing below this level 420 is not looking good for the stock market. It is going to make people on Wall Street have these different narratives about what is going to happen. And like I said, if you can't get above 420 by the end of the week, you are going to be going all the way down, you know, possibly 4,000. 400, you're going all the way down to 400 next week, and then we will go from there. With that being said, guys, Don't be scared, all right? I still have hope that there is an end in the market rally. I still believe that, but there has been a lot of things that have happened over the past 3 weeks that can make me switch my narrative. But like I'm saying, I'm going to stay strong. You know, the fear and greed indexes, all these other things are telling us that we are oversold. But as you can see in 2023, it did not matter. You will sell off and continue selling off. And maybe the bear market has started to claim its territory once again. So like I said, guys, if anything else develops more, if the bonds cannot, stay below 5% by the end of this week, I will switch from being a bull back to a bear, because the stock market is just reacting to the bonds really. And then, oh, by the way, you also have the dollar. If we take a look at the dollar, look at where it's back. It's almost back to 30. And what did I tell you guys a couple videos ago about the dollar? Once it reaches these, levels, that is where you will start to see destruction within everything. That is where the dollar will start to destroy things. It will start to have a negative effect. And also, don't forget about China. China is a very key player into this as well. I'll get into that on a different video because they deserve their own video. But that is feeding all into everything that's going on. The macro environment is stronger than it's ever been, and the stock market is surprisingly reacting to the macro environment. I wasn't expecting it to react to the macro environment like this, but when you have bonds hitting 5%, you have dollar reaching 30, you have all these different things, war headlines, all these different things, and you have earnings disappointments too, so that could also be feeling it. Now, with that being said, guys, keep your head up. It all depends on what happens by the end of this week. If the bonds can close below 5% this week, I will still be bullish on the market. If they can't do that, we already broke one of the criteria, which is holding that 420 level. So if we can't do either of those, it is going to be a rough end of the year, and you are going to see stocks fall faster than you thought. Anyways, guys, it has been your boy Young Sor.